Hey guys, hope you and the families are doing well. When I'm looking for swing trading setups, there are three variations of Japanese candlesticks that I'm looking for. Now I refer to these as trigger bars, shakeout demand tails, and gap down reversals. So that's what I'm going to be teaching you in this video, how to visually recognize these trigger bars, these shakeout demand tails, and these gap down reversal bars, and where to look for them in relation to key daily moving averages. Now the three most common daily moving averages that I'm going to be looking for these Japanese candlesticks to form around are going to be the 10-day EMA, the 21-day EMA, and the 50-day simple period moving average. So by the end of this video, hopefully you'll be able to recognize these three Japanese candlesticks and know where to be looking for them in terms of relation to key daily moving averages when you are looking for swing trading setups on the daily chart. Market Surge are today's video sponsor. They're my go-to resource for analyzing company fundamentals. If you're interested in a discounted trial, then you'll find a link to that in the description and the comment section below. So the first candlestick that I'm going to teach you how to recognize is what I call the trigger bar. Then I'll teach you the shakeout demand tail. Then I'll teach you the gap down reversal bar. So the first bar, a trigger bar, oftentimes it's a low volume inside bar that forms around one or more key daily moving averages. Now it doesn't have to be an inside bar, but I really do like inside bars, especially when it forms on a key daily moving average. So again, those key daily moving averages that I pay closest attention to are going to be the 10-day EMA, the 21-day EMA, and the 50-day simple period moving average. So let's start off by looking at a couple of trigger bars. So let's start up here with GEV from 2024. So GEV is in the context of an uptrend here, okay? It's above all key daily moving averages, then it pulls into them. It actually forms this shakeout demand tail that I'll be teaching you in a couple of minutes time. But then here you get this low volume inside bar sitting just in between the 10-day EMA and the 21-day EMA. Now when I'm swing trading in terms of the entry technique, I will quite commonly use what's called a buy stop limit order. So quite simply, I'm buying it through the high of that candlestick and a stop loss essential to below the low of that candlestick very broadly, okay? Then I'm also trying to make sure that my initial risk is less than the 20-day average daily range percentage of the stock at that time. So this is what a trigger bar looks like, a low volume inside bar, preferably sitting around one or more key daily moving averages. So again, to emphasize those one or more key daily moving averages is the 10-day EMA, the 21-day EMA, or the 50-day simple period moving average. If we go to AMD, because this is probably the best example, actually Rocket Lab had some really good trigger bars I traded, but AMD here, okay, 2019, it's in the powerful uptrend and then it pulls back in and it starts basing. It forms a gap down reversal bar here that you're going to learn about, and then it pulls in, sets here inside day, low volume around the 10-day EMA. Look how the volume is just dried up in here as well. So these low volume inside bars sitting around one or more key daily moving averages, I really like them. They're the kind of setups I really look for, especially if they're in the leading stocks of the day. And obviously that leadership can change on a day-to-day and a week-to-week basis, so I always want to be aware of it. But when these leading stocks like Rocket Lab, which was the real leader of the space theme, okay, form these setups, so it's in a nice powerful uptrend, pulls back in here, kind of a bit of a wedge type pattern, and then look, you get this inside day right around the 10-day 21-day EMA. It pushes up here, it's in a nice uptrend. Here you get another trigger bar inside day right on the 10-day EMA, pushes up here, builds a bit of a Davis box, okay, Davis box with a nice shakeout demand tail coming through here, and then you get the inside day right on the 10-day EMA. So let's now transition to shakeout demand tails. So let's cast our eyes back all the way to 1981. So if you go and you study the leadership stocks of the day over the last 50-60 years, you'll just see that the same thing is continuing to happen. Okay, it's just the same thing repeating itself. So you could go and look at McDonald's back in the 1970s and 80s and the 90s. You could go and look at, say, Schlumberger back in the 1980s, and you'll just see these same setups keep happening, okay? The stock is in a powerful uptrend, and then it starts building a continuation base. Now, continuation base will quite commonly take the form of a flag, a wedge, a pennant, a Davis box, a volatility contraction pattern, a cup with handle, a flat channel, a flat bait, whatever, right? It's just the same thing. But what I like to do is actually understand things from a supply and demand perspective as well for what is happening on that candlestick. And then the key daily moving averages are a really useful reference point, because then you go, hang on a minute, I saw that McDonald's back in 1981 formed this kind of flag type pattern here, and you see, so here's your flag type base here, then it pulls back down into the 21-day EMA. It looks to be just about an inside bar. It's not, maybe not quite an inside bar by a kind of cent or so. This will be split adjusted 101 times, but see, it's an inside bar plus a shakeout demand tail right on the 21-day EMA, and look how the volume is dried up as well. It's absolutely textbook. So then I can go and study this. Now clearly I wasn't trading this in 1981, but what I can do is I can build my mental representations to go, hang on a minute, these leading stocks of the day, whatever they may be, it could be PLTR today, it could be McDonald's back in 1981, they move in the same way. Okay, look at the acceleration here that the McDonald's has. Again, this will be split adjusted 101 times. Look at the surge of volume coming, but this is a lot of interest, and then the stock starts building a common continuation type base, and then you get this textbook shakeout demand tail. So then the entry in the setup is through the high, stop loss underneath the low. So this is how you can build out your mental representations, your pattern recognition to go, hang on a minute, I saw McDonald's do that back in the 1980s. I'm seeing PLTR do it in 2025. Okay, it's just the same thing keeps happening. Okay, supply and demand is supply and demand. The only thing different is the tickers. Okay, the tickers are changing. What stocks were showing leadership a week ago, a month ago, a year ago, 10 years ago, probably aren't going to be the same stocks showing that leadership in another 6 months time, a year's time, or whatever it may be. Okay, so this here, textbook shakeout demand tail, hammer candlestick right off the 21-day EMA. If we look at Rocket Labs, okay, this one here, okay, really nice shakeout demand tail off the 21-day EMA. So isn't that interesting? Leading stock finding supportive action on the 21-day EMA. McDonald's 1981, leading stock finding supportive action off the 21-day EMA. Okay, GEV 2024, leading stock finding supportive action underneath the 21-day EMA. Shakes out, reclaimed it like this. AMD, gap down reverse bar underneath the 21-day EMA. That's interesting. Could be quite a good reference point to be using. Okay, so the shakeout demand tail, I'm looking for it around the 10-day EMA, the 21-day EMA, or the 50-day simple period moving average. This is Nvidia. Now, if I was to zoom out here, Nvidia was building a much bigger base, and this was like the handle of a much bigger kind of cut with handle that was developing. But before it transitioned out of the handle and went on a pretty big move here, what do you see? Well, this is a shakeout demand tail off the 10-day EMA. See how it perfectly finds support off the 10-day EMA. So I'm looking for those hammers, those doji dragonflies, those Takuri lines. Okay, now in terms of a gap down reversal bar, the stock gaps down off the open and reverses, which is why I call it a gap down reversal bar. Now I like to look for that around key daily moving averages. So if we take AMD for instance, okay, it can act as a really good shakeout mechanism as well. Panic the weak hands out, knock out a load of stop losses as well. So if you look at AMD, stock's on an absolute tear here, okay, moving up and then it pulls back down, and the prior close is here. So the prior close is here, it gaps down, opens here, and then reverses like this. So what is this telling me? Well, as soon as the market opened for this stock, buy orders were flooding the market enough to take out the sell orders, okay? Willing buyers were stepping up right off the open. So you see this? Think about the psychology. The prior close is here, gap down, open here, and then it just pushes up. Okay, immediately buyers are stepping up immediately as soon as the market opens. It's really good. It's a really good sign of demand. And then at this time here, AMD leading stock, and it's around that sweet spot moving average being the 21-day EMA. So I really like these gap down reversal bars. If we look at Nvidia over here, gets a little bit more subtle, this one. The prior close is here, little gap down, opens here, bounces off the 10-day EMA, pushes higher like that. You see this? Prior closes here for this shakeout demand tail. Okay, gaps down, opens here near the 10-day, little shakeout underneath the 10-day, strong close like that. So I like to see ideally the stronger closes, whether it be a trigger bar, a shakeout demand tail, or a gap down reverse bar. But I think if you can train your pattern recognition to spot these type of candlesticks, trigger bars, shakeout demand tails, gap down reversal bars, and then you can scan and identify the leading stocks, you'll just see this is how the stocks move. Okay, this is what they tend to do. They tend to move up like this, pull in, form a continuation type base, form shakeout demand tails, gap down reverse bars, trigger bars, they push higher, they form more setups, they push higher, they form more setups, they push higher, and then eventually they will top out. But I hope that short video there is useful for you in terms of learning about trigger bars, shakeout demand tails, gap down reversal bars, where to look for them as well on daily charts in relation to key daily moving averages. Again, that's going to be the 10-day EMA, the 21-day EMA, and the 50-day simple period moving average is where I'm looking for these types of Japanese candlesticks to form to then set up swing trading setups I like to target. So thank you very much for watching. Thank you very much for supporting the YouTube channel. And as always, I look forward to seeing you in a future video.